We are doing the series of our how a digital bank is different than the conventional bank. We have already done the 3 videos. Today video is more on a products. Products is a big difference between the digital banks and as well as the bank. So first we have to understand what kind of division in the existing conventional bank, and then we have to go back to digital bank and see what they are having it. When you look into the conventional bank, there are a number of divisions within the bank. One is a consumer banking or the retail banking. A lot of banks are very heavy on a retail and more on a consumer banking, like Citibank. There are many banks which are having a heavy corporate banking as well, along with the retail, like the bank HSBC, Standard Chartered Bank, uh, Bank of America. A lot of banks are having a very heavy corporate banking as well. Then it comes into that SME bank, because there are small or local corporates which are working in a country level or region level. These are neither coming into the retail banking nor into the corporate banking, and because it is a very different segment, and most of the banks are having a separate division for SME banking. However, in a lot of banks, it is either tagged under the consumer banking or tagged under the corporate banking, retail banking too. The fourth, which are very much there, and a lot of banks are having it because they are looking forward to make the money, and make the money from people who are having a heavy wallet, means that they have a lot of money, in fact, and that is called private banking. And of course, the need of the private banking is very different than normally corporate banking. The other is the investment banking. Investment banking itself is a huge business where they are providing the advisory, they are providing all the support to the various corporates and even to the individual to invest. Before we should go into the product, we have to understand the architect of the any conventional bank and how the systems are connected with each other, and then we can look into the product which is riding on it. So if you see the conventional bank, it's very simple. There are two sides of the core banking. Core banking in a conventional bank is very, very heavy, means most of the products basically on a core banking solution. So core is also having a lot of products, and same as then there is a external connectors which are partners like ATM network. So it can be your own ATM network which is connected with the core, and also you have a ATM network which is connected with the other networks, like if any country or in a Europe there is a large network of MasterCard or large network of white label ATMs. Those are also connected with the core banking application. Then the credit card, debit card, both are connected with the core, and all the transaction which is happening actually at the end is going to the core banking, and this is all connected with the API. So if there is a credit card, Visa or Master, either the bank has gone with some service provider or directly to the switch. It's all depend on them. Like on a debit card or the credit card, sometimes there is a partners with you, and the partners are having a switch which called debit or credit card switch. So you are connected with the APIs to them, and they are connected to the Visa and Master and Union credit card. So all this is external partners. Then the SWIFT network is very important for the core or conventional banking, because most of the transaction which has cross country are happening through the SWIFT network. Even though in many countries the connectivity between the general ledger at regulator level and the bank is also on a SWIFT system. So SWIFT is also very important for the bank when they are doing the debit and credits in their own journals into the regulator's account. Same as SWIFT is also important when you are transacting outside, and every bank supposed to have a Vostro and Nostro account in a USD external partnership. Now, coming into the internal systems, there's a lot of internal system with the bank, usually conventional system built in a passage of time. In fact, like data warehouse, CRM, treasury systems, trade system, private banking, SME system, Islamic banking, lending system, and credit scoring. Now, each of these systems are very, very heavy. Like if you can take an example of, say, trade system. So trade system are basically having a huge number of products themselves. Like within the trade system, if you can see how many products they are having it, usually it is between 20 to 30 products are there for the, and it is varying from a functionality perspective. Deposit account. So in digital bank, there is no such thing called fixed deposit, but in a conventional bank, is a large retail customers are coming with the fixed deposit. A fixed deposit or a time deposit, you can say short-term deposit or the long-term deposit, you say. There is a huge number of variation in a product. So even though even one retail banking customer can have more than 99 variation of the saving account and fixed deposit into one bank. So that is very different than the digital bank. A digital bank doesn't allow normally the 2 or 3 or 5 saving accounts, whereas a conventional bank, you can open as many as your saving account. You can reserve the saving account for your purposes as well. When you're issuing a check or when you are spending, you can use any of the your account. Now, when we come to the digital bank, it's very different. It is different in a way the core banking is not that heavy. Now, there is a view in a digital bank that why we should be having a product into the core. It's not necessary. If you have a product outside the core and just transacting to the as a GL to the core, that is fine. And same as, especially when you are dealing with a lot of partners. So when you are having a partners relationship, you should keep this products outside, and then only you have to use the GL transaction, credit and debits. That is a big difference between the conventional banking and the digital banking. Digital banking, the core banking solution is very, very thin. And one of the reasons is also that usually they use the cloud. So if your system is on a cloud and supporting to the many countries, like if you see the example of Revolut is having in a 26 countries. So obviously he's not having a 26 countries separate system. It is on a one system, and one system is on a cloud. So when you see this, the cloud, the GL is very, very thin, and the products are around. And the same, like they are having the similar, like they are external partners. So through APIs, they are connected to them. And they have an internal system like CRM. There's a regulatory reporting system. There is a card issuing and processing system. So all internal system and as well as the external system are connected with the APIs. Now, I'm looking forward and going into 3 areas. One is account, card, cash, and payment. So these are the 4 areas which actually we have to go through when we are talking about products, because products is in all these 4 areas. There are other areas as well, but generally in a digital banking, and as now we are talking about purely on a digital bank, this is only on account, cash, cards, and payment and transfer. And in 4 areas, the product becomes the product. So we should talk about what kind of accounts usually the digital banks are having it. I reviewed around more than 10 banks in UK. UK is a very mature market where a lot of good digital banks are there, which is Monzo, Sterling Bank, Atom Bank, Revolut. Uh, so those are not working since last few years. They are there for more than 10 years, some of the banks. So they have created a lot of products and a lot of product variation. So I gone and did the analysis of these banks, and also I did little bit of a product variation which Mox, which is a Standard Chartered Bank. So I have a more knowledge about Mox as well. And also I have gone to the V Bank, which is more a digital bank in China. So, and some of the banks I have seen into the India. So when you go into this banks and looking into the account, there are 5 types of account: saving and personal account, current account, business account, joint account, and wallet account. So that's the total number of account variation these people are having. It can be uh, like saving account only, and in a saving account it can be seen as a free account or the paid account. And a paid account, it can be having a 4 variation, like um, uh, Revolut is having it. First is free, second is normal standard account, third is pro account, and fourth is metal account. And per month fee, first is free, but second, third, and fourth is not free. It's you have to pay monthly fee. When you are paying a monthly fee, it's mean that it is attached to the services you are taking against this account. Means that how much you can withdraw the money from a ATM per transaction per month, kind of. So if you are having a metal, you can go to the to 800 pounds. But if you are having a free, you can have only the 200 pound. So this is something, the variation they created on services pertaining to various accounts. Now, one example I can give you, simple, because of just I want to explain it better. Monzo and Sterling. So free account, both are giving the free account. So if you want to open a account, they are giving a free account. Then there is a paid account. So paid account, they are Monzo is charging pro account. So pro account is 0.5 per month, and the premium is 0.15 per month. Whereas Sterling is not having any kind of paid account. So it's totally free. That's pretty good in a sense that Sterling Bank is giving all the functionality as a free bank. Joint account, both are giving the facility for a joint account. Both are giving the facility of a business account, mainly for merchants and the small merchant and small companies in UK. There is a child account as well. So both are allowing the child account, and various variation, like Sterling is having a 2 type of, one is between 6 and 16, which allowed the parent intervention, and another is 16 to 17, which is like of moving from a child to the actually full account. The other currencies, the banks are giving multiple countries currency accounts. Like Monzo is not having any additional currency. It is only pound you can work on. Sterling is giving a pounds, and as well as euro as well. Let's move to the card now. So digital bank is normally offering the 4 types of card. One is a ATM withdrawal card. You can say that bank account withdrawal account also as well, because this is something that a debit card. So it's a debit card or account withdrawal card is the same thing, in fact. Uh, it is a ATM card withdrawal, and obviously these all cards are linked with some of the network over there. Through that, they can be able to take the benefit. So in UK, there are two types of cards. One is working within the like country, and one is working outside country as well. And the same as the credit card as well. So credit card is also each of the bank is having some card which is giving some very nice functionality, and each one is targeting to someone. Like some customer, some bank are targeting more towards the people who are traveler, some people who are more interested in a cashback, some people who are more interested into the payments through credit card, some some of the people who want to use at restaurants, hotels, and get some uh, discounts. So they are having a very specific card, where when you go to the conventional bank, it's a very different. What I have seen is the bank is always struggling how to reduce the number of cards. So some of the banks are having a 15 types of cards, some of the banks are having 10 types of card, some are having on a 7 type of cards. But I have not seen that any of the bank is having less than 7 credit cards offering. And it is same, like they cater the credit card for the every segment of the customer. Means one credit card is for the customer who are traveler, so they are getting the point system, and through the point system they are having affiliation with the airline, they are having all this. So it's a kind of traveler card for the segment which is different. One is a segment where the people are more interested in a cashback. So when they are spending into the restaurant, spending on a petrol pump, spending on a somewhere else, they can be able to get the cashback. So the conventional banks are coming up with the need of every customer, because they have from a very small customer to a very large customer. Whereas a digital bank, when you are coming into the credit card, these are the retail customers, these are the personal customers, these are the customers which are common people. So that is different than actually conventional bank. Next is virtual card. Virtual card, digital banks are also having the virtual card. You can have multiple card, but you have to pay. So first card is free usually, and if you want to have another card, you have to pay for it. Prepaid card, it is a very different card. Means that you have a deposit, and out of deposit you are creating a card of a $1,000 or pound, and actually you are using it for some purpose. So it is a sometimes safety card as well, because you are not exposing your account for anything. But regulators are very keen to see this kind of cards, because lot of money laundering, if they are giving a large limit or a large size of the card, it can be misused as well. So let's see that how I've given in a account Monzo and Sterling. Now I'm giving little bit of a card side. So first is very interesting. The digital bank see that whether the card is empty or the card is full of information. So this is something that the mindset of the people now. Some people likes it, some people don't like it. Some people really like to know that what is my card number. So if there is a no card number on a card, some people like me are a little bit scared, or only having the last 4 digits of the card. And same as see and copy card number. So can you see and copy, or you can scan the number and send it to someone or not? So that functionality is also available for both Manzo and Sterling. So details are on a card. The other thing is called see the CVC and CVV. CVV, you know, remember that there is a 3-digit number on the back of the card, which is basically the security number, verification number. And Sterling is showing this on a card, whereas Monzo is not showing this. You cannot see the CVV number over there. So it's mean that you can have your own personal CVV number, which you can register when you are getting the card, or you can later on change it. But it is not available to see on a card, which is a good thing to me. I think CVV slowly and gradually has to go away, because this is the if somebody is taken your card, and this guy who is on a counter quickly can take a scan of that back of the card. He knows your CVV and you knows your card number. So it reduces the fraud if CVV is not on a card. Instant digital card. So yes, both are offering it. Instant digital card means that it's kind of virtual card. So you can have a digital card online from these two banks. Then it is generate a new card number. Yes, some banks are allowing it, but these two banks are not allowing it to generate a new card number, because new card number is actually a new card. So when you are saying that or when you are blocking your card because of any fraudulent transactions, actually you are stopping the card. And whenever you go and replace that card, the bank gives you with a different number, because that card has already been blocked. So it cannot be issued on the same number. So whenever they have to generate the new card, they have to do some activity. I mean, whether it is a third-party switch they are using it, or directly using the switch, it's all depend on how the transaction has to go through. It's very much like the process of issuing a new card. CPIN requires CVC or ID or video selfie when you are going to the Manzo, but when you are going to Sterling, it's very easy process to do that. Like you can be able to change the PIN, and whatever the mechanism of the bank to do the two-factor authentication, or having a digital PIN somewhere on your mobile, whichever the mechanism they are using it, they can go for. But Monzo is having an additional check when you are going on a PIN change, means that you have to show your ID on your mobile. You have to do the video with on a selfie. So you have to give the instruction on a selfie, and the back of the office, the people or the computer can see that video and see you are the same person, and then so it's a more of a ID management. No, you cannot change the PIN quite often. So they are giving certain limit that you can be able to change. The freeze card, yes, you can freeze card at any time. You should say that, oh, I'm not using the card. It's not means that it is block the card. It means that you have freeze the card. There is a difference between freezing the card and the blocking the card. Blocking the card means you cannot do any transaction, and if you want to use the card again, you cannot do that. When you are freezing the card, it means that you are freezing for a while, for a month, for a week, and you can be able to unfreeze the card and you can be able to use it. Now, restriction options are there on a Monzo called contactless restriction. Sterling is saying contactless as well. Gambling is Monzo is putting the gambling restriction feature as well, that they are having a huge database behind it, where the payment monitoring system ignores the transaction if it is a gambling transaction. Same as on a Sterling, they are looking into the chip and pin, they are looking into the online, they are looking into the mobile wallet, swap, abort transaction means outside country transaction and gambling. So let me tell you that Standard Chartered, we were using a system which was doing 165 types of information. Through that, transaction can go and cannot go. So some are basis on his credit kind of score. So if a person or the company is having a fantastic payment history, and credit score, some of the relaxation is there. Means that on the basis of the flags into the system allows them, some customer, to the limited number of amount without any verification. So that is pretty good, in a sense that large multinational banks are allowing this depending on the what customer is. Second is, when it goes to the transaction, anti-money laundering, sanction monitoring, blacklist monitoring, this called highly politicized people monitoring, and a lot of other monitorings are there. So what the system does is basically they looks into that when somebody is doing a transaction on a card, and it can be able to use it. And you can change it. Like all these 165 is not necessary that you can use the all. But now you can, some of the companies are coming up with payment monitoring by using AI as well. So this is a rule based, but there is an AI as well, which is looking into the behavior outside country. I will do a separate video on it, so don't worry about that. But transaction monitoring is the key thing, because digital banks are really not afford for a lot of frauds. Because if it is a prudent transaction and customer will not pay it, and a bank supposed to pay it, they will go in a lot of issues. Chargeback is there, so you have to understand that if it is a small amount of $20 transaction, nobody will go for a chargeback. Bank has to take it that cost. So you have to be very well into this area. Now, free if it's stolen or fraud. So both banks are giving a different, like if Manzo is, if it is totally free, if there is a stolen and you have a report of a stolen card and some fraud has happened, they will issue against the fraud a new card to you. Whereas Sterling is doing only one per year. But if you want a card more than one, or more fraud is happening on your card and it is a twice time or three time your account has been blocked, card has been blocked, you have to pay every time $5 per card. So even though Manzo is also charging 0.5 if more than 2 times. So why I'm telling all this to you? I'm telling because you have to understand that how digital banks credit card is working, because this is the one of the best product they sell it. They are advertising it that we are having the best credit card and the best debit card. So this is very, very important as well. However, when I'm comparing with the retail banking banks, conventional banks, I see a huge difference. We'll come separately on a trust, service, and timing. That is a different issue, and we will discuss separately on that. But in the card case, the conventional bank are not behind from digital bank. So if digital bank is really looking forward to give a card which is called Revolut is giving a card of steel card or platinum card or metal card, it's fine. It's just a wrapping. We call it, you are having a same credit card, but how you wrapper it differently. You have to wrapper sometime on a red color, green color, yellow color, black color. This is all called a wrapping on a same product. So it is more of a marketing gimmick rather than actually what you are giving. So my view is that conventional banks are much ahead in this area, and they are covering to some of the very heavyweight customers or large deposit customers or large relationship customers with the card where they are spending a lot of money. Like people, I saw that people has gone and just put the card in front of the and I did it also. I bought a car, a Mercedes, and I've gone and to the I selected the car and just put my credit card over there and send you can charge here. So the people who are having a very heavy credit card transactions, heavy amount of limit, they can be able to do it transaction very heavily and make a lot of money. Because see how the money is comes into that is a separate section, because it's not a product. I will cover some other time that how you have to make the money on a credit card. Now coming into now next is cash. Cash is, in certain countries it is very important, certain countries it is not important at all. So it's all depend on which country, which region you are. If you are in a Sweden, probably they are pretty good on a not having a cash much, or cashless society is more, digital bank is providing the services. Or you in China, in Shanghai or Beijing, and these people don't know about now cash. So there is no cash. So if you go to the shopping center, whether you are buying in a $5 amount thing, or you are buying a $10,000 amount thing, they don't take cash. Even the beggars over there is having a QR code, and you have to scan the QR code and pay with the WeChat to the beggar the amount which you want to give it to them. So nobody is keeping in a pocket the cash. So if you want to give a $1 or $5 to the beggar, actually you are giving through the QR code. So every shop is having a QR code, which is a standard QR, centralized QR, one QR code, which goes to any sort of merchant and any service provider or the bank. So they can scan the QR code and the pay from a wallet. So even in a Malaysia, Singapore is a not cash based society in a sense. A lot of people are very much willing to pay through. But when you go to the countries like Bangladesh, Sri Lanka, or Pakistan, or quite extent to the India or Africa, really cash is important. But looking into the Europe, it is a mix of it. So why I'm saying the cash deposit is a problem or key to the digital bank? Issue is digital bank is not having a branches at all, where the conventional bank is having a branches. So some branch are having a branches like 2,000 branches, some are having 3,000 branches, and I've seen in India a bank which is having a 30,000 branches. So they are having a branch in every town kind of. So people can go to take the cash, they can pay the check also, they can give the check, they can issue a check, ask them to overdraft check they want to. All kind of these check transactions are happening out of branches. Whereas when you go to the digital bank, they don't have actually the branches. So where the people have to get the cash, because eventually the people need some cash. Like somebody need just $100 bond, $100 of the bond. So where he should have this $100 if you don't have the account with the bank which is having the branch and have a purely digital bank. So what they came up with the called partner network. So there is a partner network, and I have given in an example my early when I was talking about the segmentation, that partner network for many companies like PepsiCo and Nestle is Costco. So Costco, the people go and buy these things which are actually manufactured or worked out by PepsiCo, Nestle, or any other company, in fact. So that's the concept they brought in, and I will give some example to you. And the limit is all about, of course, with the partner, they cannot be able to get a large limit. Even the banks also, they are not give unlimited limit when you are coming to the branch, although you are having a deposit. So if you are asking for a kind of $200,000 or $500,000, you have to tell branch before. Or corporate usually tells morning that I'm sending a person especially for salaries, or especially they want to distribute the cash to their some of the outlets. They get a large amount from the banks. Now, same thing I want to do is Monzo and Sterling. Looking forward, what they are doing in this regards. So, cash deposit, Monzo signed up with the PayPoint, and PayPoint, you people can go and deposit the cash, and that is 28,000 locations in UK, which is pretty good, in fact. PayPoint, and same as Sterling is having post office for cash deposit, which is 11,500 locations in UK. So both are doing pretty good in that count, that cash deposit, they are giving the functionality, whereas not other banks are doing it. Like if you go to the Wise, or you can go to the some of the other digital bank in UK, they don't have any outlet for cash deposit. So you cannot go and give the cash. Of course, you can take the cash out from the ATM, but depositing a cash is a challenging thing. Like Revolut, I remember they don't have. N26 did it good in Germany, that they signed with the one big outlet in Germany, so that people can go to those outlets and be able to cash deposit. Of course, there is a fee on it, and there is a charges on it as well. Now, cash deposit limit, Monzo is giving maximum to 300 per transaction, and up to £1,000 on every 180 days. So maximum anybody can deposit up to £2,000 in a year. Sterling is very similar, like transaction deposit varies by branches. So it is not like post office is also having a various branches, like some are accepting less, some are accepting high amount. Pound 1,000 in a calendar year, then 0.7% per $3 charges. So if you are having more deposits, more than a $1,000, you have to pay. Cash deposit charges, Monzo is charging $1 per deposit, where Sterling is not charging it. Cash deposit by post. So cash deposit is by post and in a Monzo, and Sterling via app up to $500. So you can deposit the check through an app to the both bank, in fact. Cash withdrawal, still in a sense, £250 in a Monzo every 30 days, and 200 pound rest of the world, then 3%. Like if you are going to outside the countries and you are doing the cash withdrawal with the ATM, you have to pay 3%. And maybe because I've seen in a Revolut, they are using the MasterCard for the withdrawal. In other countries, obviously, it's a 3% charge. And 3% is basically the charge like any credit card is. So this is something that more of a functionality issue. Sterling is having a no limit on a cash withdrawal, in fact. I'm not sure it is within the country or outside as well, but look like that it is only within the country. Now coming to the another area of the product, which is called payment and transfer. This is the area where digital bank done a lot of work. They have done extremely well. They designed the whole digital bank around payment and transfer. And that's what they are telling to their customers, that we are doing better than actually the conventional bank, because the conventional bank fee charges, FX rate, and other things are very, very cumbersome. Means that they are charging more than actually digital bank. So the product they are having is a cross country. You can do the payment cross country. You can transfer the money cross country, multi currency. So in fact, Revolut, you can go and transfer to the some 65 countries, and 26 countries they are already there. And how it works basically, that if you are doing through a in a Revolut through a Swift, they charge $5 pound straightforward. But if you are going without Swift and using their own network, which they are having it, and they are giving a pretty good FX rate. So their charges are pretty low. It's very similar to Wise. Wise is also giving a very competitive pricing on a FX rate. Now, what these people do, actually, they are doing netting, and netting is now getting common into the conventional bank as well. Netting means if Revolut is having in a 26 countries the bank or the bank app. So when you are transferring from A currency to the B currency, what they do is they are keeping an account in a country and the B country some account. So what they do is during the day, these people are continuously going and transacting from A to B and B to A. So it is going both ways. Like somebody from Germany transfer the money to the UK, somebody from UK transfer the money to Germany. So they are doing the netting at the end of the day, or in between, they are pumping the money here and there, and pumping the money definitely through Swift. So it takes a little bit of a time. So they have a system that can manage it. However, Revolut says that if you are doing this transaction on a weekend, they will straightforward charge additional amount. So this is something that obviously they cannot do the netting during the off days, because the banks are not doing it, because the FX rate is not available on holidays, and that's how they cannot be able to do it. So this is something, the overall infrastructural issue. Within the country, it is much easier. They are doing every kind of payments you can do. You can do the payment to the merchant. You can do the payments to your colleague. You can do the payments to the, you can share the money as well. Like you are debiting your account with the 200 pound, but you are giving it to the 4 people, 50-50 or various level. You can do this like that is called splitting your payment. So you can split the payment as well. Paying bills, all kind of utility bills, you can be able to pay it. You can pay the partial as well, and you can do little bit on a payment. What you can do is also, they call it a pot. So pot concept is very much in a digital. What is a pot account? Pot account is very similar like saving account, and you can have a separate pot account where if you are paying a say 67.10 pound. So what system does is basically it charge you to the $68 a pound, and then 90 cents it transfers to your pod account. So that is called saving. So the people who are continuously doing the payments, it is some amount they are taking from that and putting into the saving, and by the end you can continuously monitor it, that how much your pod account is basically coming up. The digital bank, little bit of giving you the transfer where the limitation comes into in a digital bank. Monzo daily limit is 10,000 pound, so you cannot transfer more than 10,000 from Monzo. Sterling, you can be able to do 250,000 limit. Of course, you can be able to, and single limit is the same. Like you can do single limit by 10,000, and you can do single limit by 250,000. However, in a conventional bank and some of the digital bank, they are having a huge functionality in a payment that you can set your limit yourself. Means that you can set your limit, that how much I can be able to withdraw from my ATM at any point of time per transaction per day. Means that You can have a different per day transaction. You can have on a ATM withdrawal, you can have a different limit for the overall day transaction. Same as if you are doing a transfer from one to another account, it is the same thing. Like you can set a lower value as well, and you can have the maximum as well. So if either Sterling is having a 250,000 per single transaction, it's not mean that the people can be able to set somewhere around 5,000 or 3,000 pound as well. And this is kind of safety of network. Like I give all the ways the example that the people whose behavior is that usually they don't send more than 10,000 pound sterling or the 5,000 pound sterling anywhere in a transfer. They should set up a single transaction limit by 10,000, 5,000. And they should set a separate limit for the daily limit as well. And why it is because if your system has been hacked, if your somebody did something, you are protected from a lower loss. Means that you are having a set up a lower limit. So this cannot be done in a larger scale.